The stock market's gonna crash. Or maybe not, who knows? But what I do know is that a lot of people are making clickbaity videos about how you can prepare for that stock market crash, and it may induce fear into your mind and heart because typically when people hear about the potential of losing money, they get scared. But typically when you're scared, you make irrational decisions and you do lose money. So in today's video, I want to talk about what you can do to prepare for that stock market crash and hopefully not do anything irrational and not lose your money. What's up guys, it's Avery here. If you're new to the channel, typically I'm talking about personal finance and investing in real estate. And today I want to talk more about the fundamentals of investing. Getting back to those basics so that you don't have to worry about whether or not there is a crash or everything is just going to continue to go up. Because if you stick to those fundamentals and don't act irrationally, you're going to be doing just fine. And if that sounds cool to you, make sure you go ahead, scroll down and click that like button so we can move on to the video. The last major economic crisis was in 2008. And if you bought basically any type of investment from 2010 onwards and you've held for long enough, it's probably been a fairly profitable investment for you. Some people have lost money because they've bought high and then sold because they panicked, or they've bought something that they haven't understood like Dogecoin or some other type of meme coin. But if you haven't done something like that, and if you just made a safe, smart investment and held for the last decade or so, it's probably increased in value. Now we've had a couple of dips at the end of 2018, as well as because of the coronavirus pandemic in March of 2020. But if you just look over the longer period of time, everything has pretty much gone up. And pretty much starting in 2012 all the way up until every single year, someone has said there is going to be a stock market crash. And they're not wrong, but no one has really ever given it a timeline. Right now there's a lot of money flowing throughout the economy, plus it's extremely cheap to borrow debt. So there's so much money circulating that things tend to continue to increase, like real estate, stocks, and cryptocurrency, or any other type of assets. The stock market and other type of assets continue to go down when people take money out of circulation, and when more people take money out of circulation, other people take money out of circulation, and then this sort of panic ensues, which then creates more and more of a market crash. It's almost like a self-fulfilling prophecy that people think the market's going to crash and then other people sell off, so that makes other people sell off, and that's exactly what you should not do. If you panic sell, that is exactly when you are going to lose money and you're not going to be doing very well with your investments. So tomorrow there could be a stock market crash, or there might not be. We really have no idea how to predict the exact future of what is exactly going to happen in the stock market. But because of four main reasons, you should continue to just buy and hold those assets that you were planning to purchase anyway. That first reason why you're going to continue to buy and hold is because you have an emergency fund. If you have an emergency fund of 6 months to 1 year of expenses, and that doesn't necessarily need to mean going out having fun expenses, but making sure that you could keep your place to live and have food and get through 6 months to a year of expenses, then you're going to be just fine. If you lost your job, you know that you could have that 6 months to 1 year and you're not going to end up being homeless or starve to death. And that's very important as to why you wouldn't want to sell off your stocks, because if things start to go down and you lose your job and you have no other money set aside, then you're going to want to sell your stocks and you're going to get them at a loss. That 6 months to 1 year of expenses is important because if you got fired and you need to use that emergency fund, then you most likely are going to have enough time to figure out where your next source of income is or find another job even during a negative economic environment. It's also very important that you live below your means and then you don't spend on frivolous items. When people start spending on frivolous items because the economy is doing so hot and they feel like they have a lot of money and they're over leveraging their own consumer debt and buying random stuff that they don't really want or need, is where you're going to get burnt, especially if the market actually starts to crash. The second reason why you should continue to buy and hold is because of dollar cost averaging. VTI is an ETF that I really like to purchase, and if you want to learn more about ETFs, check out the video that I did recently up here or down below. I talk about 5 ETFs that you could hold for life. But for example, if VTI, which is at around 230, 240, 250, I'm not exactly sure what the exact share price is, but if that continued to go up to say 275 and then the market crashed and it went all the way down to $200, that would be great, because then you could continue buying at 200 until it goes back up to $275 maybe 10 years from now. And really all that happened in that scenario is that you had a lower and lower average share price that you purchased that specific stock. If you sold off when it was going down and down and down, you would just lose money and then you'd have to buy back in again. but you know that today's high will always be lower than tomorrow's high as long as you have enough time within the market. So if you just continue to buy and hold and dollar cost average into these stocks, you are going to be up over time. The third reason is that a majority of you watching have time. A majority of you watching, because I can see the demographics of this channel, are going to be in your 20s, 30s, maybe 40s, and you are able to take that time that you have and have many of the corrections in the stock market not matter to your portfolio. If you tried to sell off and buy low, sell high, and all of those things, you might not be able to time the market. But if you hold on to the market, you can see that 7 to 10% return over the course of 10, 20, 30, 40 years, however long you want to continue to invest before you want to take some of that money and utilize it for whatever you want. The fourth reason why you should continue to buy and hold and not panic sell off is because you are a rational person and you are not just thinking emotionally. Like I've talked about this entire time, if you were thinking emotionally and seeing things start to fall down and other people start to sell off, and then you want to sell off because you don't want to have huge losses, but you're okay taking small losses, that's really not thinking rationally. If you're thinking rationally, you will do the first three things that I said, have that emergency fund, and just continue to dollar cost average because you know that you have time. If you were just thinking logically and sticking to those three fundamentals while continuing to live below your means and invest that excess, everything is probably going to work out just fine for you as long as you stick to that. The other thing that's important to think about is if the economy crashes, it may be very positive for you and for your investments. If the economy crashes, typically stock and share prices and real estate and any other type of asset, those prices will decrease in value. AKA, you can buy them at a bit of a discount because again, you know that today's high is going to be lower than tomorrow's high. So if it crashes, you're going to just get in at a much better buy price. And typically in any type of asset, you make the money when you purchase. If you purchase at the lower price, you are going to make more and more money. I also really want to re-emphasize time because maybe you're worried about getting into the market because you feel like we're in a bubble and it's really high, which may or may not be true. But if you overpay, and since I know that a lot of you out there have that time, then it's going to be okay because always just think about those basics. Today's high is lower than tomorrow's high. And if you end up buying low because you continue to buy and the market continues to crash, you're also going to be in a very good position as well. So again, this is why you should just continue to buy and hold and not panic sell off because things are just going to work out better if you just think rationally and don't think emotionally. If you made it this far, make sure you leave a comment down below where you think the market's headed and if you want to continue to buy and hold because you know that that is the right decision. And also if you made it this far, make sure you subscribe so you can hear more personal finance and real estate investing related content and hit that notification bell so you get a notification every time I put out a video. And if you like me here, don't forget to check me out on TikTok as well as Instagram, where I like to talk about a lot of the same topics, but more in short form. Thanks again for watching, and more wealth is coming your way.